please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to Big Deal. Today we have with us Kaku Nakhate, who heads the India business for Bank of America Merrill Lynch. Kaku, so good to have you on CNBC TV18. Is it a difficult time for a banker in India at this point?
I must say, Nisha, good times and bad times come and go. We are in the right direction in the structural reforms that actually India has been doing. And of course, from banking side, all that's happening, clearly everybody is looking out as what our next steps are going to be. And in a way, it's going to also help us increase the governance standards and policies as we go along, in line with what RBI has been doing for the several months at length.
So given the scenario in which last year was ruled mostly by the big reforms that India took over under Modi government on GST and demonetization, and that changed the outlook for India as well. We got a rating agency also change the rating for India. But this year, how do you see with the fraud situation developing, how is the global market really react to India and how will the perception change?
So I must say that people have been worried about the recent developments. Obviously, we need to explain a bit better. Also, as you see, when US went through a rough time, what they did was the announcements of these whole things, or the financial mess was kind of publicized, but within a week or 10 days, the TARP was announced. And then, you know, they put the action into play. And over the next 24 months, they cleaned it up. Right. Similarly, if it was in China, if you would say, you'd probably not even know. They would have discovered it, they would have found a solution, and they would have come out with the package, and then the announcements would have come. India obviously is a democracy, and we have our own way. So sometimes what we talk openly as debate is probably perceived wrongly in different parts of the world, and hence a good resolution. And frankly speaking, I keep telling that government has been supporting banks. And while these are process changes, these are things that are happening everywhere else also in the world. Like, for example, why is cybersecurity, for example, very important? And why are these trades monitored? Is also to take care of terrorist financing. For the whole KYC AML came from that aspect. So similarly, I feel as long as we spell out the processes, we spell out the good that even RBI has done. We have done EDPMS, we have done IDPMS. How many countries really can boast of it? But all needs to be packaged in a proper fashion for people to understand that regulations are changing, and some of these are also being discovered because regulations are changing.
Right. So, Kaku, you head a large foreign bank in India. How far away are we from the global standards when it comes to real governance structures in the banking sector?
So 2-3 things I would say. Globally, everybody is been following on capital adequacy, the Basel norms. India has also been on the path. That's why if you really see our tier 1 capital has been, added on as and when required. And maybe we, look at one more year delay of FY19, but I think we should be well on track as far as, the Basel norms really are concerned. I think what really needs to be looked into is what, we also learned across in the last 7 years or 8 years, that yes, banking clearly is relationship based, but we cannot ignore, the quantitative directions which we may get, or the risks to be assessed, so that we also help corporates come into the loop of understanding where, what are the requirements really to get the cash flows, how to monitor them, when to put in the money, etc. And I would say in the last several months, all the big banks, and especially the private sector banks, have moved quite steadily and strongly. And the provisions have also made all of us think together.
That's right. So the whole, while we are just about coming out of the NPA situation with so many resolutions going on at this time, and bank recapitalization got announced by the government, at a time like this, PNB kind of a situation is really dampening the sentiment in the banking sector. Now, Kaku, you've been working in the equity market transactions, and I know you as very strong franchise there. Now, looking at that particular area, do you think it's going to be very difficult to sell bank papers right now in the market? I know of one situation where the investors are very, very nervous.
So I would say this, you know, market volatility is at the highest globally. If you see, you know, we had a good run of global funds coming into Indian markets when the government actually announced the bank recapitalization sometime in November. After that, India, which was an underweight market, actually started seeing large flows. There was a good amount of paper actually lined up in the first 6 months. Obviously, this kind of news and also global meltdown more than anything is going to make people think about the new paper that comes into the market. But I will 100% tell you that in this market, good paper will always find, you know, investors, because India is still on the growth path. And what we should not be, how would I say, undermining that there are now how many countries can really boast of a 7% growth. So for good paper, you will find, for example, we did IDEA. It was a good deal. You know, it was closer to a 600 million odd deal. And in a tough market, in a bombed out sector, there was a clear story and people did support a good story. So I would say that there could be delays, but the story needs to be well understood. Of course, to your point, if we resolve this resolution early, which I'm sure RBI and MOF do realize and are working on it as we speak, it would do good to steady the market. I wouldn't disagree on that point.
Of course, there are investors for good paper always, Kaku. We have seen in the market, but when the overall market condition is bearish, then the investors get very, very cautious as well. We've seen that in the past. Now, there was, focus on probably consolidation, correction. Last year, we were talking about it. Is it finally here, the real meaningful correction in the Indian bull market? Is it finally here, and how deep do you think it's going to go?
So two things I would again say, that India is no longer delinked with the global markets. So the global markets itself are volatile, and you've seen, you know, markets fall across the globe, and India cannot be an exception. You know, however good you do, flows and redemptions, you know, follow the global sentiment. So that's one. On the Indian markets in particular, if I may say, Nisha, is the story over? There could be some downside, but I think people are also ignoring, and actually our strategist Sanjay Mukim just came out with a piece few days back on the third piece on transformation of India. And there I would really like to highlight 2 or 3 points. One is that demonetization and GST impact on the worst end has already gone through. The upside is now going to come. Of course, rains have to be important. And bank recapitalization overall for the steadiness of the market is a must in my opinion. So the market from here, I don't see a downside more than 8 to 9% at max. And I think once we get around this initial, worry, for good companies, even I'm seeing buy orders on our desk even now, as what my equity guys tell me.
I'll come to that, but you said 8 to 10% correction from here. Mid-caps would take a deeper cut, you think?
So mid-caps have run up also so much. So whenever you retrace from all the different pools of money.
Right.
So I would not, many times most investors forget that everything that goes up can come down partly.
Oh, that is the fundamental rule.
Yeah.
But,
so is the fall, even after all this, going to be deeper than where we started? The answer is no.
All right.
So clearly it shows that it's more a correction and not a change in sentiment.
what do you think about the NBFC sector in particular now, and also the entire financial services basket minus the banks? Now that the banks are going through a crisis, do you think that it is given a kind of a floor to the fall in the overall financial services basket minus banks, because they had run up most experts expected them to fall the most, but have they got a floor at the expense because of the kind of scenario that the banks are seeing right now?
So 2 or 3 things. I think private banks have fallen more than what they really need to. It's not just the PNB announcement, but it is also how the provisioning is going to be done in the next 180 days, and the clarification or the recognition around that. Analysts have actually talked down the stocks much more. I personally feel that the private sector banks, the leading ones, definitely look good at this level. Coming to the NBFCs, again, one of the things in transformation of India that we have talked about is about the affordable housing. And these stocks, as you know, have run up quite a lot. But our analysis shows that with the way we are focusing, and the next growth story of India, besides consumption, will come from housing and affordable housing and the urbanization of the rural areas, because we are a service-led economy.
Right.
If you put all of this together, this sector had not reacted in the last 5 to 6 years. So while year on year we may see that these prices are crazy and some correction may be due, I don't think the story is yet over.
So on the deal street then, housing finance companies are extremely active, like many other pockets of financial services space. How are you seeing this space develop going forward on M&A front and also on the equity market transactions?
So I think it will be an active space. I don't deny your conclusion, if I may say so. And I would also say that a lot of microfinance companies, etc., are also connecting the whole paradigm, in connecting the dots to see how the lower middle class to middle class can be empowered, and actually the spreads and also the, how would I say, organization around this whole industry is the next big opportunity for us. So I do see there is a lot of work being done. There again, I would say policies and governance should come early so that, there is a path laid down.
Right.
We have enough. The RERA Act has been very, very welcome. But, on the audit side, on the governance side,
a lot more needs to be done.
Yeah, a lot more needs to be done.
So Kaku, by the end of this calendar year, how do you see the entire landscape of financial services sector minus the banks? Because there is just so much talk of consolidation. Insurance IPOs came in last year. That was a big theme. Now consolidation in insurance is a big theme right now. Everybody is talking to everybody. And then there are AMC listings also coming in. Is the entire landscape going to change by the end of this year? How do you see it?
So for a growing economy, financial institutions have to grow. Because to spur growth, you do need finances. And what we saw last year, and if you recollect, we had talked about it at the insurance time, where, you know, one of the things that I had said is bank in the whole fixed space used to be large. From public sector, it went to private sector. Then it used to oscillate amongst them. And now we have added the insurance companies. Yes. Now we have the mortgage companies. So the overall weight of financial sector in India will definitely continue to grow. There will always be cannibalization on each other's, and there will be moments of where people will switch things. On insurance, yes, there will be consolidations, but valuations have to be realistic for consolidations really to take place.
But that can be said about the housing finance companies also. Certain deals are in the making right now, and the buyers just find the valuation expectation too high.
So, as I said, there the valuation expectation is high, but we have a different view, our research view, and I would encourage you to read that. So, you know, our research view is that some of these valuations will continue to be high. There could be a slight correction, but they will continue to be high. On the insurance side, of course, you know, as the insurance products need to really grow, the next phase has to be different products on this. Asset management companies, I do think, you know, having dealt with them for many years, they have the highest ROEs. There's hardly any need for capital. Electronification and demonetization has definitely brought in a whole different, you know, era for them, if I may say. They're becoming bigger and bigger.
And one big company is coming to the IPO market as well.
That's true. And the SIPs are looking, you know, like many people have adopted SIPs as an investment opportunity, which for years people kept banging the table, but people were not willing to go into it. So I hope part of the gold has replaced by SIPs.
How big is your focus on the mergers and acquisitions, you know, advisory? Because in equity market transactions, you've done a lot, but M&A, is that something also you're focusing on for this year, and which sectors?
Yeah, so we have also done one of the largest M&As this year too. And of course, the cross-border talks are at the highest. I must say that the India-US relationships have continued to improve. So people are looking at us quite actively to, you know, acquire companies or do JVs. So India is definitely looked at.
Which sectors are we talking about most, which will be active in cross-border, especially with
US? The consumer sector is one of them, where clearly there is a necessity. In JVs, defense continues to be pretty active, if I may say. Also on some of the special commodities, things like that, there is a two-way dialogue which is happening because steel prices are looking good. And of course, one of the things which can become an active market could be the distressed debt market. People are waiting for clarifications that could bring in some more money, which would actually increase our flows to India. And one should not forget, I think REITs is going to become important in the coming months.
Corporate social responsibility is also an integral part of every corporate house, and every year you come up with a paper which DASRA releases, and then you decide on your CSR activities as well. So throw more light on this year's paper and the findings of that.
This year's paper is to say that while individually each of us as corporates really can influence and we do our bit, but as a community, how can we adopt, you know, common causes like food security, economic security, adolescent girls and intervention, and how can we have a collaborative around that, and then showcase and learn from the collaborative as you go along, because you would do interventions, you would do, you know, different gatherings, and see how on the ground we can make an influence. So the collaborative is around adolescent girls. It's actually on 4 interventions, if I may say so. It's to kind of continue for the girl to continue being educated, continue to go to school, right? Continue to have a late marriage and not be pregnant early. If we can really go through 10 to 19 in this fashion and have more women, you'll have a lot more confident India than, you know, and I do believe in women power just like you do, yes, right? And the whole idea is that this collaborative we are actually doing in Jharkhand. That's what Dasra has found it as the most important area right now. And we are working with actually right now, you know, 4 NGO partners, which will grow as a period over a period of time. And the idea is to see these interventions through these NGOs in all these different aspects that I talked about, and then measure the impact, and then influence policy around it. And then we have a lot more meat on the table, because we are living far off than what the reality is. But India can become better. India's GDP can become better. We do interventions at the grassroots level.
I just wish you luck in this particular endeavor of Bank of America Merrill Lynch. Thank you so much, Kaku. On that good note, let me thank you for spending time with us, and we will connect again on the overall deal scenario and market developments as and when they really unfold.
Thanks, Nisha. It's been great being with you.
Thank you so much. So with that, we end Big Deal. Thanks so much for tuning in to CNBC TV18.